Welcome back to the channel, everyone. Jay here. In today's episode, I want to give you all the information you need to get the most returns out of your 401k. All right, the first fund I want to talk about is the Vanguard Target Retirement 2050 Fund. As you can see here, year to date, they're up 10%, which is pretty good. But first things you want to do is you really want to check out these expense ratios. Morningstar's ratings are always good too, 4 out of 5. And this yield trailing 12 months means that they're giving a 1.83% dividend on your money plus the share appreciation. So we're up around 12% between the year-to-date performance and the dividend performance. Now let's check out the 5-year. Not so good, right? So over the last 5 years, this has only returned 10.41%. You are collecting the dividends along the way, but the compound annual growth rate over 5 years is around 2%. Plus the yield. So you're getting around 3% on your money, which is not very good, but it's stable. There's not a lot of upswings. There's not a lot of downswings. So this is a very safe way to invest your money. That's why the bulk of this 401k portfolio is in this target fund. All right, let's move on down the line. Let's check out the Vanguard Value Index Fund. Year to date, they're not even up 1%, which is not very good at all. Luckily, we only have a small percentage of our money in this fund, but they do, however, pay a 2.5% dividend, which is pretty good, and a very small expense ratio. So as you get older into your 401k life cycle per se, you want to kind of go into more safer index funds. They're not going to have the big upswings, but they're not going to also have the big volatile downswings like we've seen in some of the growth index funds over the past few years. So let's check out the 5-year returns on this Vanguard Value Index Fund. 27%, not bad. About 5-6-ish percentage every year you're getting on your money, plus the 2.5%. So that brings you in that 7.5% range. So that is not too shabby at all for the Vanguard Value Index Fund. And there's not a lot of risk here, which is great. Moving on down the line, we're going down to the Vanguard 500 Index Fund. This is one of my favorites. Year to date, they're up 14%. Their trailing 12-month dividend yield is 1.5%, so that's pretty darn good. They have a very small expense ratio, and the Morningstar 5 out of 5 stars. So you're getting almost 1.5% plus the 14%. So you're looking, 16-ish, 17% on the year for the Vanguard 500 Index Fund. And then let's check out the 5-year chart. That growth is absolutely amazing. 50% over 5 years. That's a 10% compound annual growth rate. Plus, you're getting the 1.5% on top of that. So we're looking at 11% each year for the past 5 years on average for the Vanguard 500 Index Fund. That is great. I mean, you can't really ask for better than that. But check out Vanguard's Growth Index Fund. The Admiral shares are up 30% year to date. And that's because they're more concentrated on the tech sector that had a very good year so far this year. And if we look at the 5-year rate of return, pretty darn good. Pretty impressive at 72%. That's around 12, 13% compound annual growth rate. And you can see the higher growth funds give you less money in yield. You're getting about 0.5% dividend on your money, but the growth rate, man, that's so good. You're getting nearly 15% on your money. You can't beat that. That is absolutely incredible. This is one of my favorite funds. If you can average 15% a year over the life of your 401k, you are going to make boatloads of money. Enough boatloads to buy your own boat. All right, check it out, guys. Then we're going to go to the Vanguard Mid Cap Index Fund. As you can see, the year-to-date growth only 5.4%, and they're giving you a small yield at 1.5%. This is not my favorite fund. I'm actually considering taking the money that I have in this Vanguard Mid-Cap Index Fund and putting it to work somewhere else. As you can see, but the 5-year growth is way better. So you're getting 6% each year on your money. For a 30% in 5 years, not too shabby with the 1.5%. So you're getting around 7.5%. That's not too shabby. But the last year to date, it's not the best, as you can see. 5%. But when you zoom out, when in doubt, zoom out. 30% over the past 5 years gives you that 6% compound annual growth rate, plus the 1.5% brings you up to around 7.5% per year, which is pretty darn good. And then our last but not least is the Vanguard Information Technology Index Fund Admiral shares. And over the past 5 years, oh my gosh, 108%. Wow. That is just absolutely unbelievable in the past 5 years. And year to date, up 33%. I mean, these funds, the tech sector is flying high this year. You're not going to get these type of gains every year, but sometimes the risk it for the biscuit, guys. That's what I always say. If you risk it for the biscuit, you have a chance to absolutely crush the market returns. I think VOO, the fund that tracks the S&P 500, is doing around 7-8%. So you are doing 4 or 5x what the S&P 500 is doing this year. But when there are downturns, you're going to get smoked. But what you got to do is just keep dollar cost averaging, putting that money to work for you each month. And then when it rips, you're going to absolutely crush the market. And that's what we try to do here. We always try to beat the market or stay with the market. If we can do 7 to 10%, and then some of our funds do 30, 40%, our 401k is going to make us a crap ton of money over the life of the 401k.